Good morning, traders. It is Monday, July 21st. Taking a look at the charts, equities are trading slightly higher this morning, up about 0.2%. Small caps are up the most, almost 0.7. So money's flowing into some risk-on assets. They want to get into the more volatile, the more growth play, which is kind of what we've been seeing, especially with the hot list. We've got all of the top performing, or more so the more aggressive, lucrative kind of plays, fast-moving stock sectors all at the top, and they've been screaming higher. What's kind of interesting here is over the last few sessions, we saw the S&P 500. We also saw the Russell 2000 dip into this oversold territory. It was oversold. We did have a little bout of panic selling. Anytime we get to panic selling, a spike on the green indicator over 3, which we also had over here, usually indicates short-term pivot lows. We did see the market bounce from there. Short-term basis, there's no real insight as to what's going to happen today. If we look at the daily chart, though, it has been a series of rallies and pauses, which are a series of bull flags. And of course, this market could have that next push and run higher. We've talked about that with the S&P 500. It already is pushing higher. It's traded sideways. It's grinding at all-time highs, wanting to push and go higher. Of course, this is applying maximum pain to anybody trading inverse ETFs, anyone betting against the market, or those who aren't long the market with any position are going to have a lot of pain, either cost-wise or just FOMO of missing out and watching things push higher. So overall, it's going to be another painful week for a certain group of individuals just on the wrong side of the market. Now, if we take a look over at our sentiment chart, let's take a look at either one. Both of these are the same. If we take a look at our sentiment chart, this is the Nasdaq, which we've hit our 15% target. We're about to get into, I think, some increased volatility here and start to see the market become more jittery. But if we look at this sentiment chart on the right side here, we got an orange bar on Friday. Even though we pushed to new all-time highs, we saw an orange bar. Now, typically in an uptrend, orange bars should happen kind of after a pullback. It's usually actually a little bout of fear. It's a little bit of money flowing out of the market. And generally after there's that little bit of fear, the market starts to shoot higher. What's interesting here is it's actually happened at a high, which you can see over here. We had it at a high. In a downtrend, you notice it kind of happens near a high, and then selling takes over. Now, I'm not saying that's going to happen, but we definitely are getting closer. Everything is aligning that the market could pull back here and have a significant pullback. That is pretty much what almost always happens after we hit a 15% target from a trend signal on the QQQ. Now, if the QQQ does it, it also means the rest of the indices will do it. The SP 500, the Dow, the Russell, and of course, sectors and stocks will get hit even more percentage-wise. So let's take a look at the rest of the market. We do have the bond market up 0.9%. It's been in a nice little three-wave pullback here, a little bit of a pop and squeeze higher. Interest rates must be pulling back, I would think, a little bit this morning if we were to just take a look at the 10-year. And we're seeing it have a gap down this morning. So money's flowing into bonds, money's flowing into bonds. It's also flowing into stocks. If we take a look where else it is flowing, let's take a look at utilities. Now, Friday, we had a strong close on utilities. And when the utility space starts to outperform and really take off, it can be known as a big red flag. We've seen this happen many times in the past when it really dramatically outperforms. Now, it has to dramatically outperform for more than a day. It has to outperform for usually a week or two or longer and outperform the S&P 500 or Nasdaq. And that becomes a big warning sign. We saw that just before COVID. Utility stocks skyrocketed. The stock market just traded sideways. We've seen this just before some major tops. So we're going to keep our eyes on this. It has been trading sideways for a long time, and now it's starting to come back to life. Gold also starting to come to life this morning a little bit. It's pushing back up near these more recent highs. This is a long-term bull flag pattern. So we could see utilities and stocks potentially kind of rally together and firm up, both as defensive plays. No matter what happens in the economy, we're going to use and need utilities. That's electricity, running water. And so those companies are seen as a defensive play, and they pay dividends. So that's where money goes. Big companies that are stable and are needed no matter what happens. And gold is also the global barometer of get me out of everything and just put me into a metal, into a different asset class to avoid collapsing prices or currency issues.